Energy Vista, a podcast on energy issues, personal and professional trajectories. I'm your host, Leslie Palti Guzman. In each episode of this podcast, we chat with energy experts from all around the world. We exchange on timely energy issues as well on their life experience. You will learn a lot whether you are an energy aficionado or a newbie. And one of my favorite parts of this podcast is the focus on their personal stories. I always find it very inspiring. It's March 13, 2020, and time for a new Energy Vista episode. Today I'm exchanging with David Goldwyn, president of Goldwyn Global Strategies, an international energy advisory consultancy. He served as the U.S. State Department Special Envoy and Coordinator for International Energy Affairs from 2009 to 2011. And we will hear more about his trajectory later in the podcast. David has also published a recent report for the Atlantic Council, a new energy strategy for the Western Hemisphere. So we will discuss the US-Latin America future outlook for their energy cooperation, and also we'll see how the coronavirus has or may or will impact the region. Hi, David.
Hi, Leslie. Your intro music made me feel like dancing.
Yeah, it's time for a little bit of joy in today's world. So this past week has been intense. Global financial and energy markets are on edge. The World Health Organization has just designated a global pandemic. And also this week, Russia and Saudi Arabia have entered a major oil disagreement. So all this together sent oil prices, gas prices, bottoms. So as the market prepares for like $30 to $20 per barrel, and for the gas price still around $3 per million BTU or lower through most of 2020, maybe. What are your preliminary thoughts on the impact for the oil producers and countries that are deriving a lot of their wealth from those energy resources?
Sure. Well, first, leave it to the titans of the global energy world to make a bad situation worse. We were already looking at relatively weak demand, oversupply, and soft prices before coronavirus hit. Then coronavirus started to take off, and particularly in China, which is a major trading partner for Latin America, for the US and others. So the market was starting to really look very weak, with prices declining around, from $50 to say $40. And then this game of chicken has broken out between Russia and Saudi Arabia. The Saudis wanted a major cut, another 1.5 million barrels a day. The Russians were having no part of it. The Russians walked out and said, we won't make any contribution. And the Saudis said, fine, we'll turn on the taps. And now prices after discounts are really heading towards $10, I think, with the discounts people are offering, the effective prices. Wow. So not much chance for resolving this very, very soon, with, the titanic egos of Putin, Sechin, and Mohammed bin Salman not wanting to back down. But it's looking pretty grim, and there's a lot of collateral damage, including in Latin America.
Gloom and bleak. So what about Latin America? You just wrote a report. Do you think some of what you've wrote should be reconsidered in the light of the coronavirus?
No, not really. When we wrote the report, we said that the Latin America was in a relatively weak state. It was facing weak demand. It had great needs for investment, but was not getting the levels of investment that it wanted. The economies were suffering from very weak growth and rising concern about inequality. And we thought it's in the U.S. interest to help them get the investment they need for their own security and stability, for our energy security, and for the preservation of democracy. And that the United States ought to lead a new kind of strategy to help these countries learn from each other and promote growth. So I would say now it's probably more urgent than ever, because the level of adjustment that these countries need to make to their frameworks to attract investment is greater even than it was before.
So why is the US so interested in strengthening their energy relation with Latin America? I may see two reasons, and they are far from being the only ones, but one is, I think, geopolitical, where it's a way for the US to reaffirm its leadership and bring some allies closer through bilateral deals and maybe multilateral, not sure under this administration, but also to counter China expanding clout in infrastructure investments and in the US own backyard. And the second one is something you're mentioning in your report is the big element, like the main idea of bringing prosperity and stability in the region could also halt the immigration crisis from Central America. Do you think those are the main reasons, or there are other reasons?
I think it's a little all of the above. The initiative began with a request from then Energy Secretary Perry to Fred Kemp, the head of the Atlantic Council. They had looked at the Three Seas initiative in Europe and how it had really brought countries together for economic security and national security, and said, why can't we do something like that for Latin America? So I think that's concerned that our major trading partners, Canada and Mexico, were prosperous, so we could be prosperous. But I think it was also an appreciation that this region has a unique comparative advantage in being, largely democratic, friendly to the United States, very heterogeneous in terms of energy, and with a dominant number of democracies, with a couple of exceptions, and that that we should invest in helping the region prosper because it's good for us. And I think the other issues you mentioned, immigration, reducing migration pressure, and security, I think are all part and parcel of that. In fact, there was specific mention of the need to address Central America and the Caribbean, which are not large sources of energy supply, but very important for security.
Yeah, I remember the strategy America Crece, America Grows. How is it different, or is it a continuation of that strategy?
This is a complement to Crece, to the America's Growth Initiative. It's Western Hemisphere, so it includes Canada, and the idea is to be very specific on energy and energy frameworks, and that's as you can see from the report, that includes both helping countries attract investment in oil and gas, helping them develop nuclear, helping them modernize their electricity systems. And it's also a facilitator for the energy transition. Latin America, among all the regions of the world, is probably closest to meeting its Paris targets of any region, in large part due to hydro. And so, it's all of the above.
Very interesting. So it's not just a way for the US to sell more US LNG or other form of energy.
No, not at all. And in fact, it's a little bit of a departure, frankly, from an administration that has not been supportive of foreign investment, which has not wanted to continue investor protections, as we saw in USMCA, and has been mostly interested in bringing companies home. So this is really a step in a little bit of a different direction to help countries that some of them are exporters to the U.S., but a lot of them are importers, and some of them are just neighbors where we don't have a great or really an important energy connection.
Yeah. So in the past 2 years, the U.S. government has signed energy cooperation agreement with Chile, Panama, Jamaica, Argentina. Those are bilateral deals. Do you think there is room for multilateral cooperation, or not yet?
No, I think there is not a multilateral trade deal, because the administration doesn't support that, but multilateral cooperation, absolutely. And when I was an assistant secretary for international affairs in the energy department under Bill Richardson, and I think we signed probably 15 or 20 of those bilateral agreements, and it's a good commitment to work with a country. But regional integration is really key. This is helping. What these countries need to do, particularly the ones who are big suppliers or big producers of gas, they need to create internal demand for their products. They need to build out their midstream network so they can move gas from the places where it's produced to an electricity plant, to a place where there might be a factory or a mine, or to remote parts of the population. And so the need to bring countries together is important for an economic reason. But the other reality, we took on is that the United States doesn't have all the answers to all of these questions. A lot of the issues that are important to countries, like social license to operate and dealing with indigenous communities, we can learn a lot from them. Or Canada and Mexico might have something to share with Brazil. So this is more about the U.S. setting the table for the conversation than it is it is the U.S. providing all the answers, although we are trying to leverage the technical expertise of the Department of Energy and the national laboratories.
Mm-hmm. So there is, in Asia, there is the Indo-Pacific strategy. Is it kind of a parallel for this strategy in South America?
I don't think this is as geostrategic as the Indo-Pacific strategy, but there is, there is an element of, I would say, consideration of the China's influence and the influence of other great powers in the region. And I think what is in common is that we want these countries to be able to attract investment with no strings attached. And the U.S. knows that in a lot of these areas, like building railroads or long-distance transmission lines, U.S. companies are probably not interested. And so this doesn't have to be U.S. investment that comes to these countries, but with better framework, they can address, they can rather acquire investment from private equity or from other countries. The idea is that they be able to do it without sacrificing any of their sovereignty. So it's not China specific, but the Chinese model does loom in the background.
Yeah. And do you see a role for the U.S. Overseas Private Investment Corporation or USAID?
Absolutely.
US TDA? Yeah.
Yes, and the core elements of this strategy are the leadership from the Secretary of Energy, use of the national laboratories, but also that this is a whole of government approach, because the State Department has its energy governance program, USTDA has programs. The Development Finance Corporation was on our panel at the launch and is very interested in this region. And it doesn't have to be a U.S. company that seeks financing to get DFC assistance. So I think it's going to take all of the many tools that the U.S. government has, but they are all very interested in these kinds of investments. So it was very well received, and I'm really optimistic that the main objective of a strategy like this, which is to have a galvanizing force which will bring these disparate elements of the government together to be more focused and effective, will be successful.
Yeah. And post-coronavirus, do you think there will be budgetary issues for the U.S. government to assist outside the U.S.?
No,
because
I don't.
I was just thinking through the European Green Deal, and Europe being massively hit right now, there might be some reconsideration of priorities within the European Commission, and the European Green Deal, might be slowed down a little bit because of budget issues.
This is not an expensive strategy to deploy, so I don't think either budget austerity or the coronavirus will impact it. We're really talking about very focused workshops on specific issues, like how do you integrate renewables into the grid? How do you attract investment into the midstream? How do you develop a framework for advanced nuclear energy? This is more bringing experts who are really focused on how do you get this done from a legal and technical point of view. Right. Where I think the coronavirus has the impact is that the competitive environment for these countries was challenging before. It is formidable now, with weak demand for oil and gas, with weaker growth. It's going to be harder and harder to get companies and others to want to invest in some of these sectors. So the countries are going to need to be much more competitive in that competition for capital.
Yeah, it definitely reminds me like 2015 pricing environment and the impact on large oil and gas producers. And actually, so in the region in South America, there is Argentina, Bolivia, Brazil, Canada, Colombia, Ecuador, Mexico, Peru. All those are large oil and gas producers. Let's start with Mexico. I know this is something you've been covering a lot. The new government had been rather ambiguous about their energy policies, and investors had cold feet. How do you think it's going to change in the current pricing environment?
It's going to be very problematic for Mexico. Poor Mexico. They did the energy reform, and then we had, as you mentioned, the 2014 crash, and so. Just as they had done all the hard work to be competitive, they walked into the worst competitive environment that we'd had in quite a long time. So this is really going to show how much the president's strategy is going to need to adapt in order for Mexico to succeed. Pemex has a very negative outlook from the rating agencies now. They only hedged some of their output for this year. If their bonds are rated below investment grade, a lot of holders are going to have to dump them. the government's going to have to pour another $13 billion into Pemex in order to have it meet its targets. So this idea that, they should walk away from a strategy that used other people's money, private capital, for energy investment is looking like it's not the right strategy for Mexico. And I think they're either going to have to adapt, which they don't seem ready to do right now, or the fiscal impact on Mexico will be draconian. These low prices alone are going to provide a serious setback to their budget. And this president wants to do social reform and other things, so he'll have to make some hard choices.
Yeah. What about Guyana? Guyana is kind of a newbie in terms of being this large potential, is already now oil and gas producer. What do you think will be the impact for a new country like this who didn't rely on massive energy resource in the past?
Well, for Guyana, I think because it's sort of greenfield development there, and it's a very large asset, which means the unit cost is low. It's going to remain high in the portfolio for the investing companies there. Mm-hmm. The revenue will maybe lower than expected, but it was supposed to be $300 million this year, going up to $4 billion, in 2025. Prices are going to recover at some point, so that 300 million might turn out to be 150, but over time it will still be a huge amount of money for Guyana to manage. So I think they'll be fine, and if anything, they'll have maybe a more reasonable budget to try and adjust as they learn how to do revenue management and plan for effective investments. We're also getting a hard lesson in oil price volatility right out of the box.
What about Argentina? We talk a lot about the bleak outlook for U.S. shale oil and gas. What about the unconventional play in Argentina? Are producers still going to be involved and want to continue their production there?
I think the companies that are invested in Argentina will continue. Unfortunately for Argentina, they have very little room to make adjustment in either fiscal or monetary policy to deal with this downturn. They've already got, they had one IMF deal, they're working out another. The Vaca Muerta is not an inexpensive place to develop. They still need infrastructure to carry it to market, and they need bigger markets. So I think you could be looking at a bit of a plateau in Argentina, especially until it's clear what their fiscal policy is going to be. There's a bad history of nationalization in Argentina, and they're already kind of banning imports to pump up the domestic market. So I think companies are going to sort of stand pat, but not withdraw.
Talking about Argentina, you mentioned in the report the idea of building a regional gas market in the Southern Cone. Can you unfold a little bit what it means?
Sure. The Southern Cone, particularly Brazil and Argentina, have a lot of gas, but not necessarily where they need it. So Brazil's is offshore, but it needs a lot of that gas in the interior and in the Northeast. Argentina has it in Neuquén, but they need more pipelines to get it to Buenos Aires or to move it to Brazil, which might be interested in taking it. And you think of these countries as large producers, but if the infrastructure makes a big difference, you've got to have the resource where people need it. So there's this potential, both for seasonal differences and also for geographic reasons, for them to be able to use piped gas to trade with each other instead of importing additional LNG, as Brazil and Argentina are now, or at least to complement LNG. And they also need to, if they get that infrastructure, then Brazil in particular mentioned the fact that it has mining operations in the Northeast, which require a great deal of electricity. If they can find a way to either move the gas and have a local power plant up there, or if they can move the gas to a large power plant and transport that electricity long distance, they can have great economic development in a different part of the country. Mexico is also looking at building out its gas network because there's lots of parts of the country which are not well served either by electricity or by gas, which can fuel gas-fired electricity. So there's a tremendous amount of regional development that can happen. And these countries have not really sat down to look at what the market looks like and how they might optimize it. And that's a conversation, because the U.S. has had these experiences between states and in regions. That's a conversation we can be helpful with.
Yeah. Mexico had been trying for many years now to connect itself with Central America and provide gas to countries like Honduras, Guatemala. but it never happened, mostly for political reason and economic reason. Do you see that in the more distant future happening, or it would be hard?
Well, it would take a change in policy in Mexico. And they actually have a treaty which allows for the cross-border transportation of gas. There has been resistance by some of the countries, including maybe even especially Guatemala, which does not need it itself. And so it's not that enthusiastic about infrastructure that crosses its border. But mostly Mexico doesn't have its own surplus gas right now. Mexico is gas short. They have blackouts in certain parts of the country, and they're very ambivalent about bringing in U.S. gas. They both want it because it's cheap, and they don't want it because they want to be, gas independent. But they're not going to allow hydraulic fracturing, so they're not going to have any gas. But you could certainly imagine a system where they could move gas from the United States with transit fees to Mexico onto Central America, or bring it in through LNG into Veracruz and then move it down. But that's going to require Mexico kind of migrating back a bit to an open access gas transmission system with predictable tariffs governed by competent regulators, so that people say, okay, that's a system that's going to be around for 30 years and I'm willing to invest in it. Mm-hmm. And they're not there yet.
Got it. Great. Well, David, thanks for this reading of the report. Let's move to your personal and professional trajectory. Okay. Another fun aspect of the podcast. So you had several years of experience in the energy policy realm, both in government as in the think tank world in Washington, D.C., as consultant. Can you tell us how did you get there? And you mentioned to me that you have a special place in your heart for your mentors. What does it mean to have mentors, and how did they help you?
Sure. Well, I always wanted to work in government, but I never expected to end up taking the path that I did. And I guess that's probably the first lesson that I've learned, is always be open to a new adventure, because you never know where it will lead. So I started off, in 1986, working for a law firm. I got to work for Ted Sorensen, who was President Kennedy's counselor and speechwriter. And we got to do a lot of things. And from Ted, I really learned how to write and to be clear, but also to be kind to everyone, because he was an incredibly gracious man. And we thought we were all going to the White House in the 1980s. And, then it turned out to be Dukakis. I ended up being a corporate lawyer for 5 years. And then I got to the State Department as a lawyer. And a year later, the Undersecretary for Political Affairs, Arnie Cantor, was looking for a speechwriter. So I'd done some speech writing. So I got myself out of the lawyer business into the diplomacy business. And Arnie Cantor was an amazing mentor. I mean, he really taught me to be careful, to question everything. No matter how well briefed I was, he always asked me a question that I hadn't thought of. And in working for Arnie, and subsequently for Peter Tarnoff, the next Undersecretary for Political Affairs, working under President Clinton, I wanted to avoid Soviet Union or Russia issues, Eurasia, economic issues. I wanted to work on national security issues. And that was my world until Bill Richardson became UN ambassador and asked me to run his Washington office. And we had a great time when he was UN ambassador, traveling to all these countries. And he's an incredibly courageous political leader. And then he became energy secretary, and all those things I'd avoided, like economics, Eurasia, and energy, became my career. And it really took off from there. And it was incredibly interesting. And we brought diplomacy to the energy department. And that was just this huge shift in my career, where I never thought I would be in energy. I always thought I'd be in diplomacy. And it turned out energy diplomacy has been my path.
Yeah. Do you think the US government is still thinking about the right positioning between energy and diplomacy, like to coordinate both? Because I feel like between the Obama administration and the Trump administration, it hasn't been the same approach. There is always a lot of thinking going on about what's the right tone, the right posture, how to use it, not to use it.
I think energy diplomacy, has continued to be important, and now you have the Energy Bureau, which I helped to conceive when I was working for Secretary Clinton. So, we've had to do a lot of energy diplomacy, everything from right now with the president intervening with Mohammed bin Salman, I think, to ask what the heck you're doing, and can you stop tanking the oil markets, to helping emerging markets develop, to the sanctions on Iran and other places. So I think it remains important. The chronic problem, in my view, that both Democratic and Republican administrations have is that energy is a little bit of the stepchild to the national security and the economic worlds, and it's very hard to integrate them. And I think that integration really has to happen at the White House rather than at the departments. And we haven't had that yet, but a new administration might have like an Energy and Climate Council or something to provide stronger White House leadership, because you still need that energy diplomacy, and it still matters in virtually every part of the world.
Great. Well, David, thank you so much for your time. You are definitely a very kind, smart person, and thank you for all our interaction in the past years. And I hope you'll be back on the podcast.
Thanks very much, Leslie, and congratulations on your really successful company. And I really enjoyed talking with you today.
Thank you. That concludes our Energy Vista podcast, which was recorded on March 13, 2020. This is Leslie Palti Guzman saying good day and good luck.